What's up, you guys? I have a special guest with me today. I've got the president of National Mortgage Funding, which is our new mortgage company, Mr. Steve Frost. Thanks for being here.
You're welcome, Brandon. How are you?
Doing great. So here's the deal. There's a lot of things happening globally with this whole coronavirus, and what's going to happen? How's it going to affect the housing market? How's it going to affect mortgages? Yeah. What does it all mean? Now, Steve is an absolute expert when it comes to mortgages, understanding the financial markets. And on popular request, we've gotten a lot of our agents at Brookstone and a lot of agents outside of our company asking about, well, what does this all mean for mortgages? And so the Fed did something as we record this today on Monday, March 16th. The Fed did something. They lowered the Fed rate to 0%. Is that right?
0 to a quarter, yes.
0 to a quarter. So this thing right here, this phone has been blowing up like crazy. Brandon, what does this mean? Does my client still qualify? Does that mean we get 0% on our mortgage? Does that mean our mortgage is free? And so what we're going to do today in this interview is Steve's going to help us understand the information better so that after you watch this video, you can go back and educate your clients. If you're a real estate agent watching this, you can educate your clients as to what does this mean. If you are a consumer, you can leave this video and know what it means. So first off, again, thanks for being here.
You're welcome.
Help us understand what that means, the Fed rate.
All right, so good point. And there's two main things took place with the Fed yesterday. Well, actually, I should say three. Number one, an emergency meeting happened, which is always a big deal, and it kind of shakes up the markets. But the Fed, the first one that everybody knows about, they cut the rate down to 0%. It's 0 to a quarter.
Okay.
Is technically what they say the rate is. And that literally has nothing to do with the consumer. So the Fed mortgage rate, I shouldn't say Fed mortgage rate, the Fed funds rate is basically the rate at which the government lends banks or companies or whoever money for 1 day. So it gives companies liquidity for making payroll, basically paying bills. So it makes things a lot easier. So the Fed funds rate, as far as a mortgage is concerned, is good for a loan officer for a couple of reasons. Number one, it gets their phone ringing because people just become aware of their financial markets. They look at their own situation, say, is there something I can do to improve? And as a loan officer, a mortgage broker, your phone rings and you talk to people and you can help them and figure out what's going on with their loan. The second part of what took place yesterday is, or I should say the third part, I guess the emergency meeting was going, but sure, whatever it is. And this part's like really more technical than you should really ever have to explain to a client or a consumer, but it is what happened, and it's what makes a difference, and it's quantitative easing number 4.
Okay.
So they did this back in the original recession a few years ago, and it's basically the government is coming in and they're buying mortgage-backed securities.
Okay.
So as you remember, last week, the week before, and the week before that, long-term interest rates bottomed out. They got really, really low. Lenders got super busy, and rates kept dropping.
Sure.
So lenders locked all these loans, funded all these loans, and as they go to sell them in the secondary market, there's so many of them that investors didn't want to buy. They just said, well, rates keep dropping, therefore our returns are going down. Why would we buy these? Plus there's 1 billion of them, make them cheaper. So what happens is for the lender to make those less expensive or more appealing, they raise rates to borrowers, and the government has now come in and said, we'll buy 200 billion of those so that rates go down and people continue borrowing money and lenders benefit from it.
Yeah, let me add.
Just super technical, but it's a lot to take in, but that's essentially what they did.
Okay, so I want to unpack that and understand it better. So are you saying that the interest rates are, how do I put this? That the lenders are playing with these interest rates because of the amount of people that they're servicing? Is that kind of what's happening here?
Kind of. You don't want to make them a bad guy because they're not.
Sure.
But the lender, what's happening with the lender is they originated a ton of loans and they basically can't get rid of them. There's just so many loans out there. There's supply and demand. There's way more supply than there is demand.
Okay.
And the supply is being devalued. So the government's going to come in and with the $200 billion to purchase mortgage-backed securities, they're saying, we'll buy some of these And then mortgage rates and the 10-year treasury, those margins will decrease and it's easier to track and it makes more sense.
Okay, so that's one part of this. The other thing I wanted to kind of get your opinion on is what does this all mean for consumers? I think based to your point, a couple of weeks ago, interest rates were super low. Yeah. Now they're up, now they're low. You know, let's talk about some tangible takeaways, right? So we're working with a buyer in the marketplace.
Yes.
They're out shopping for houses today, and they haven't locked in an interest rate. Do they wait? Did they do something now? Like, what's your advice when it comes to what these buyers and these homeowners should be doing right now?
So, from a buyer perspective, we'll take that first.
Perfect.
So you're looking for a house. I assume you're pre-approved. You have a loan officer, mortgage broker, whoever you're working with.
Yeah.
At this point in time, just communicate. Hopefully your loan officer's doing it, but if you haven't heard from them because they're busy, which happens, reach out and say, where's the rate now? What will my rate look like? What is my payment gonna look like? Did they come down? Can I afford more house? Can I go from maybe one area where I could, where I was looking, and now maybe I can afford something a little bit nicer, a little bit better schools? Like, that's the tangible thing. When interest rates come down, you can go from a $200,000 budget to a $250,000 budget, which can make a huge difference in your school. And I'm not saying that it'll be exactly that, but it increases your buying power. So if I'm a home buyer right now and I don't have a home under contract, I'm just going to reach out to my broker, my loan officer, whoever it is, and just say, where am I at? Like, rates are doing this, and I'm hearing this, and there's a guy on YouTube with Brandon and he's saying all this. Like, where am I at? Like, what's my payment? What's my down payment? Like, how does all that fit into my situation? That's a home buyer. If you're looking at a refinance, and I would tell anybody this, is their rates are really, really low. If there was a time that you wanted to shorten the term of your loan and pay it off faster, if you have credit card debt, if you have a home equity line of credit that's been floating around and all crazy, anything like that, it's just a good time to get your loan reviewed.
Okay.
Like, just take the time to do it, get your credit pulled, and look at everything. And see what works, because rates are really good. At the end, regardless of they're a quarter here or a quarter there, it's a good time.
Okay. So I think one of the hardest things, the biggest challenges that we face in this market is people looking at interest rates on their mortgage like a casino, right? What if I wait a couple days, I'm going to get, a point less, or if I wait this out, that's always the concern for a buyer is like, okay, if I do something today, they have this scarcity mindset, like they're losing out, which causes them to do nothing, so from that perspective, the people that are on the sidelines saying, I'm going to wait to kind of see what's going to happen, not holding you to it. You have no crystal ball, but like, what's your opinion of the future with interest rates? Do you think these things are they going to tend to go up? Are they going to go down? They're going to stay the same? Your opinion?
My opinion is that in the short term, like the next few days, week or so, I think we're going to see rates stay about the same. Okay. I don't think anything's going to happen. You might see some small fluctuation. Believe it or not, rates came down this morning. Some lenders have repriced for the worst today, so it's gone up. So I think it's going to take, the market with interest rates and like long-term debt like that is kind of a wait and see. There's a lot of economic data coming out this week. Okay. Some economic data next week. So if, right now, it would be, I would say that rates over the next couple weeks, we should hopefully see them go down. Hopefully this quantitative easing works. Okay. And it frees up some of that money and we start seeing that would be the ideal thing. And that's just kind of the way I look at it. And that's how I look at it if I was in either position, a refinance or a purchase of a home. Okay.
And then lastly, I want to kind of discuss this question that keeps popping up. So this morning, we're shooting this here. We're in Michigan. I don't know what other states are doing, but the governor shut down all the restaurants, shut down all the bars. So not to put you on the spot, but I'm gonna put you on the spot, and that is you working with a client, all right? Or buyers working with a mortgage company to get a loan. Yeah. They are a waiter, let's just say, at a restaurant. And now this thing comes out this morning, says they can no longer work. How does that affect underwriting while they're in process? A lot of real estate agents at our company at Brookstone and generally in the industry are asking about how's that going to be handled? I know it's uncharted territory. I don't know how the underwriters are going to deal with that. And so how would you answer that? Do they lose the loan, or what does that look like?
Yeah, I mean, so that's kind of and again, it's uncharted water.
That's right, we don't know.
So I don't know exactly how they'll review it because, and this is just like a very specific situation, but when I have a loan where somebody is making an income based on tips.
Yes.
It's something that you're going to look at. You try to get at least 2 years of really thorough records.
Okay.
They're going to look at your pay stubs and your year-to-date earnings, and they're going to do a verbal verification of employment. I mean, so in the near term, it may, if you're closing next week, it may not be that big of a deal.
Okay.
In 30 days and you have no tip earnings or no wages, but realistically, and I don't want to say the wrong thing, but that income is kind of a challenge to use sometimes anyway. So I would definitely proceed with caution.
Do you think there's going to be any relief that these mortgage companies get from the government in these situations where the government's saying, well, Steve, sorry, you can't work? That they give some relief to these mortgage companies, say, hey, and we don't know, this has never happened before. Do you think it's possible that they say, okay, it's hard to say.
It's kind of, again, it just going into the whole coronavirus and what everybody has been saying, there's just so many questions that as far as like, and I don't want to say anything out of line, like, I don't know. I don't know what these relief funds are going to be, who they're going to go toward, or how it's going to benefit anybody. I don't really know. I know, as much as anybody else. Yeah. And we'll kind of wait to see. I don't know. My
advice for my clients and agents at our company at Brookstone is to make the best decision with the information you have.
100%.
That's all you can do, right? So this is all uncharted territory. We don't know. The only recommendation that I would have as you leave this video is to use common sense and then use the facts that you have right now to make the best decision for you as the consumer or for you to advise with your clients. Anything you want to add to that?
Yeah, the one thing you left out there that's important is communicate. I communicate with my real estate agent if I'm looking at buying a home. I communicate my loan officer that I'm working with, whether it be my pre-approval or wherever I'm at in the purchase process or the underwriting process. The other thing I'd say, and you'd mentioned the facts, is that there is a ton of news, and there's stuff from like bars closing and restaurants closing to payroll tax relief to quantitative easing to emergency meetings and Fed rate cuts. At the end of the day, when you buy a house, you refinance a house, it's how much you're going to write a check for at the closing, how much money you're going to write a check for every month, and are you finding something there you're comfortable with? Yeah. And I think as long as you communicate with the people that are helping you navigate that, and you can answer those questions about how you participate, which is check writing, right?
That's exactly right.
When you own a house, it's like you're the check writer. That's right. What's your propensity for writing checks? That's right. That's all I would leave all the news alone. I wouldn't get caught up in any of it. I would just communicate and make sure I'm comfortable with what I'm writing checks for.
Yeah, it makes a ton of sense. And the last thing I'll leave you with is don't gamble. Since I've been in this industry, I know you've been in this industry a long time, I see a lot of consumers trying to play the market. There's no such thing as playing the market in real estate, because you have to make real-time decisions with the information that you have, because here's what could happen. The downside of gambling is, I'm going to wait to try to get a better interest rate. Well, what could happen with that? Maybe you lose the house. Right. Maybe interest rates, and a lot of times they go the wrong direction and you lose. And so I never think that it's worth gambling the house for your family on a quarter point interest rate to change your payment by $60. And if you look at it through that lens, you'll say, that's not using common sense. I'm not going to gamble the house that works great for our family on a quarter point gamble. So that'd be my recommendation. So Steve, thank you so much for doing this interview. I'm sure there's gonna be a lot more coming because there's so many questions that you and I are getting on a daily basis. And our commitment to this industry is that we bring you the facts. We bring those to you in real time. So Steve and I will continue to do that. But thank you guys so much for watching. Any last pieces of advice?
No, thanks for having me. And keep it simple, communicate.
I love it.
That's all it is.
Thank you guys for watching. If you have any questions, you can comment below and we'll do our best to get back to you as soon as possible. Stay safe. We'll see you guys soon.
Yep.